Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/Rive to receive the top 10 stocks to buy right now. One of the big trends that we've seen over the last 6 months or so for all of 2023 is growth stocks are once again what investors are in love with. There are some good reasons for that. There's been some companies that have reported really good earnings. We're maybe starting to see that the Fed is not going to raise rates anymore, maybe one more raise or something like that. So there's a lot of speculation around that. Unemployment continues to be really good. Consumer spending is good. How are you feeling about this market, John? Because I have so many thoughts going through my head as stocks, these massive companies jump 30, 40% in a day. And you go, man, are they really worth a couple $100 billion more than they were just yesterday? Or are we in some sort of weird bubble that is not the same bubble as we had in 2021, but maybe related? Where's your head at? And let's try to figure this out.
I concur. There have been several days in 2023 where I've looked at some of the stocks in my portfolio and they are just trending upwards nicely, and I start to feel encouraged. I've done the research here. I feel strongly about this. It's underperformed, but now it's finally starting to perform well. And then I look at companies that I think are just complete dog crap, and I see that they're actually performing about as well as some of my favorite stocks. So it goes and throws everything into question. It's yes, this is something general happening in the market right now. All of a sudden there's a just falling back in love with growth stocks, and indiscriminately so. I like the ones that the business results start to pay off with stock returns. I don't like it when just everything is inflating back up. And that, I think that is what we're seeing. It's what I seem to be seeing. And I don't really know how to process that. Now, as I have looked at, especially during this earnings season, I think almost every company that I have covered, the financial results have been, I won't say every, but 90% of the financial results that I've looked at have been better than what I was thinking was going to be.
I agree.
The macro economy doesn't seem to be as bad as I was expecting this year, and I don't really know what to do with that.
The thing that I don't know how to process, I think, is the really big potential slowdowns that are, I want to say, probably coming, because we've been saying that for a year. But like, housing has slowed down tremendously. Housing is a huge part of the economy, something like 18% of the economy. Interest rates have gone up. That is going to have an impact on business, but it's not going to have an impact on business right now. It's going to have an impact on companies who were using stock to in high valuations to fund future growth. They're not going to make those investments in the future. Maybe they cut back, maybe they don't, but that future investment isn't going to be what it was. Companies that were borrowing money, now you start to think about, are they going to be cutting spending instead of borrowing more money to expand their business? Again, that's a lagging indicator that could take multiple years to really play out. Same thing in the auto industry, right? I just bought a vehicle, and I've been playing this game with my wife for 9 months where I'm like, this auto industry is the used car market, the new car market is just insane right now. And eventually it's going to go back to normal. And we finally got to a breaking point. But I still think eventually, whether it's 6 months from now or 12 months from now, we're going to have more and more supply of new vehicles, more supply of used vehicles. Prices are going to come down. Defaults are going to go up. Interest rates are going up. So it's harder to buy a vehicle. All these things eventually have an impact on the economy. We just haven't seen it yet. And it seems like a lot of the companies we've been really impressed by have some sort of tailwind behind their business. And I totally agree with you that like my confirmation bias kicks in with some of those. And then I see the companies that I think are terrible, and it's like they're still losing money. Their growth is slowing, but it's not slowing as much as the market anticipated. So the stock jumps. And it's like nothing fundamentally changed about this poor performing business that doesn't have a profitable future, but the stock's up 100%. And it's almost maddening to look at. And I don't quite know how to process it, because I don't know when we get out of this bubble-ish phase, and or if we do. If we avoid a recession altogether, that would be wild. But if we go into one, the ramifications could be crazy and really quickly felt. So I almost feel like I want to start rotating from some of those growth names to some safer names, maybe some cash, to be a little bit more opportunistic, because I don't think this is 2021, but it doesn't feel great either.
And what is just another wrinkle in this entire conversation is A lot of the data that I have seen has shown that retail investors are still keeping a
Yeah.
unusually high percentage of cash on the sideline. And so this would appear to be coming from the institutional side where the money is getting thrown at the market. And so how much are the institutional investors saying, okay, 2023 is here. We're going to just we're going to try to make back our losses from 2022 in a very short time period. That always ends poorly.
Yeah. Yeah. There's other things like the amount of credit that's being taken out. You could make an argument that just the money flow went from people couldn't go out to eat or to bars, like the normal stuff that people will spend money on. And so they put money in the market. You could see that in the net
Hmm.
savings rate and the amount of
Yep.
credit that people had out. Like the trajectory goes like this, and then there's like this blip in 2020, 2021, and now we're back to the normal trend line. And if we keep going on the trajectory that we're going, we're in real trouble because now we're going to start having a lot of debt problems, like personal
Yeah.
debt problems. This isn't like a
Consumer
government
debt.
conversation. This is, are people going to stop spending because now suddenly they got to pay off their loan? And so that's the big thing that I keep thinking about is like we are still spending like it's 2020 and we haven't cut back on anything. And I don't know how sustainable that is. To make the counter case though, wages are up and it's easier
Mm.
to get a better paying job today than it was in 2019, at least in a lot of locations. And there's a lot of dependencies there, but it's all kind of exasperating to look at. This is one of the reasons that I'm a long-term buy and hold investor is because I can't make sense of the market on a day-to-day basis. So I want to like opportunistically buy companies that I think 10 years from now are going to be much better. And if I kind of dollar cost average in and I say, I do this with asymmetric investing, right? I'm putting a certain amount of money in every single month. I'm going to buy my best ideas for that month, and I'm going to do the exact same thing next month. And hopefully over time, I'm going to buy at the highs. I'm also going to buy at the lows, and it's going to all even out, and I'm going to come out hopefully ahead and beat the market as a result.
I think that's an excellent point. And to your point, towards the end of 2022, I pretty passionately laid out 4 reasons why I thought the market would be down in 2023. And we're almost halfway through at this point, and the market is up. And it just goes to show you, or at least it goes to show me, how hard it is to predict in any given year. Are stocks going to be up? Are they going to be down? I can give you good reasons why I think it's going to be down, but the market is
Yeah,
actually up. And that is why it does make sense to just bet on the long term upness, because that is, statistically speaking, going to be a bet that wins you more than 50% of the time. And if you can win more than 50% of the time, you're doing quite well.
absolutely. I think that's the big takeaway for me from this year. Is keep your eyes on the long term. Look for opportunity. Don't overpay for things right now. Just because something is going up right now doesn't mean it's a great buy. Just because something's cheap doesn't mean it's a great buy too. But there's probably some opportunities out there that we can find as investors.